Hey everyone, Nick Shaheen here looking at Hyliion again, HYLN, the ticker. Not good times, right? And last time I did the video, the comments were very nice in the sense where they were human debates, different opinions, that's fine, but no insults. So that's great, appreciate it. Okay, so I also read one or two that said that's because it was down. That's because the market's down. And I think that prism is wrong because the market was not down. A few segments in the markets were down. The market had just set highs. The Dow had set new highs and the S&P was pretty close. So those two people were looking at it from an emotional perspective, in my opinion. I'm an engineer at heart, and I started out to be an electrical engineer. So I want them to succeed because cool tech is cool to me. And so these comments here are just purely based on the chart. I know the concept of it, of what they have coming down the pipe. I'm probably more excited about the fact that they have the hybrid opportunity with the retrofits. One electrified axle, that's practical and that's now. I don't know if they're pursuing or not. But the concept is the chart tells us a lot. So this candle right here, the very low, they were fighting very hard to stay above 10. Quite frankly, there should be no reason why they go back to these levels, which were in the high nines. And if they ever go down below these levels, you have to seriously reconsider your love for the stock. The company's fine. That's loving the company is one thing, but the stock is different. So in this case, there were clues, and I'm going to revisit those levels and add to them. So the point of this video is not to say I told you so. It's to say let's look out as to what values matter from here and how I can manage my risk if I have risk in it. First, I'm going to put my drawings, which may look busy, but I'll walk you through them. Actually, let me zoom in so they'll be less busy, more visible, I should say. Okay, so the first major loss was 18, and I noted that losing 18 would have a lot of downside. Mathematically, it's all the way down, but I said, okay, there's no reason why they shouldn't revisit the whatever the value for the warrants was, 11 and change, and that happened. But more importantly, knowing that level, it means that revisiting the level from below is not a start. So once they pop into a level that they lost, they usually face sellers. So so anytime something crashes off of a level and it pops back into it, it's not a reason to add. It's a reason to get out if that fixes your problem or makes it smaller, or wait for them to exceed it, because they're going to fade, come back and break it, then I would add. So we have a few of those. First one is at 18. The second one is at 15. It's actually a little over 15, but we can round it off to 15. And now I want to definitely not see below 10, because that brings back like June of last year. So there's no reason for that unless they have like given up on it. So on the way up, this one matters. So that's 11, and let me see here, 11.2. That was the low. They rejected it emphatically, and they went to happy times. They came back and then lost it. So that's the first major hurdle, this zone. And if they cannot get over 11.20, that's the bare minimum, I would question that. So mark that, 11.20. 14.8-ish is really important as well. So is 16, let's call it 17. So here's the plan. If I'm long, let's say I started here somewhere, if I'm lucky enough not to ride it from up there. By the way, I have no interest in the stock. I don't have any bias because I don't have any trades on it. So this is just honest opinion. Believe in the charts or not, so far they've guided me right on this one. And by the way, I was long up here. And on this pop, where was it? The big pop on some battery headline. This one that got it up to 22, my friend was long. I texted him. He texted me, what do you think? I should get out? I said yes, and he got out 2 days later. So popping above 1120 is super important. If you can get above 12.8, 13, way better. There's going to be sellers here. If you can get above 15, they'd be outstanding. Getting to 16 and above is going to be difficult. And if it does, and I'm long, and this gets me out even, I would get out with a bulk and leave just a lottery ticket of sort. I don't add as it gets into here. So if I'm excited and I'm just like, yay, yay, go, 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 and it gets to here, it's like, okay, I'm back on. It looks like it's good. I'm making a mistake. So ideally, when they get into prior big fails, they're going to face sellers. See that orange line right there? This is, it's called the point of control. It's a fancy term from Wall Street. Those guys love to use fancy terms. It tells you this is where bulls and bears love it the most, meaning they will be active trading it up here. So if there's an imbalance of buyers to sellers on a rally, when they get to here, they're both going to be active by a lot. So it's going to be breaks. So whatever was going on to bring it up here is going to taper. So the exuberance stops here for a while. So it will come up. Let me see here. Can I do 1 second? I'm going to bring a scratch pad to show you how I would expect it to happen. All right, so let's say they come up here. There's going to be sellers here. They're going to come back down, fail. Important to make a higher low, right? Come back here. They hit this. So now they have what? A cup and handle of sort. Then if they overcome it, test it for footing, they repeat the process, and then they hit another level here, right? And now you're inside this descending channel, which I don't draw. It draws itself automatically. It's a reversion to the mean, so to speak. So they're probably going to hit something like this and hopefully break out of this stupid descending channel. Let's say they get here, right? They're going to repeat this process up here, but in a big way. So they're going to fail. Not the end of the story. Just give them time to keep setting higher lows, keep making progress, come back, and break out from here. So these are the breakouts, recoveries that work better than these. These go pop, relief pop on a headline, and then they give it all back up. They don't have, like if they had meandered up here slowly to tackle this, faded a little bit, came back, tackled this one, got above it, tested it for footing nicely, they would have rallied this much from here. Instead, they do this pop and just let it all go. Steady work makes for better progress, sustainable progress. So watch for higher lows. That's the bottom line. Watch for contention zones. I mentioned them to you. The important one is up here. This one is important, so is this one. So 1, 2, 3, match up the values however you want. But going into here, it should fade. You should hope it doesn't do this, because it's going to be like this. It doesn't have help. It doesn't have meat. But if you inch here and you hit it and you fail, you come back and you get above it, you test it for footing, now you got a good base. Now you proved to the machines who are doing most of the buying that, hey, we have a trend. Let's rinse, repeat until the trend stops working. That's what the machines do. They learn and they keep repeating the process. Higher lows, you hit, you struggle at levels, you come back and you get above the levels and you go. That's the only recovery process. So the point of this video is to temper the enthusiasm, get the emotions out. Regardless of how much you love the CEO, you love the stock, the company, the truck, they're cool. You have to love your money and your family a little bit better, because that's really what matters. Who cares that they had the best opportunity if they can't make it work in the stock market? And they could still succeed, but the stock could still fail. So track the levels realistically and check the emotions aside. So when you see it, anytime I get this urge, like I need to buy, I think to myself, wait, it just feels too good. What am I doing wrong? Let me double check things. So then double check the levels. First concerning level 1120. They're so close. They're 1099 closed. They need to get above that and put it behind them. Higher low progress is super important. Then tackle each level. The biggest one I worry about is this one, which is 17 plus or minus, I want to say 50 cents or so. So keep that in mind. Plus this problem puts a big hurdle at 22, into 22. There's a big gap to here, and they couldn't even close it on like the best headline ever, whatever the headline was. They couldn't close this gap. That tells you there's even more clouds up here. See, I was optimistic when I was, it's not like I was here a hater, but they should have continued this higher low progress, but they didn't. They failed into a prior resistance. See, look, the mark to beat, and it failed. So now it's the wall. Trigger lower, and it happened. Trigger lower. Warrant strike, here we are. These are old notes. And here, let's see here. Proven base, support, lose it, and bad things can happen. That was months ago. I'm not Nostradamus. This is what machines do. 80% they say do the trading. Machines are doing the trading. 80% of all the trading. Hello, can you say this right? 80% of all the trading is done by machines. And machines are just methodical. They know what I'm talking about here. They know, and better, obviously. They know levels. They know extensions. They know patterns. So they first look at levels. What happened the last time we were here? Boom, let's repeat. Who's in charge? Is it a selling program or a buying program? If it's a selling, they'll sell the pops. If it's a buying program, they'll buy the dips. So you have to think like a machine. Get the human out of you, especially if you're trying to recover. And please, for crying out loud, the first video I did, I said, this is a stock I don't average down in because it just makes my problem bigger. It's a falling machete. It has a tiny handle and a gigantic blade. It's going to cost me fingers. I don't average down in a speculative stock. Not a speculative company, a speculative stock, because it has not shown anything positive in a long while. So why is this time different? Because it cannot go to zero? It sure can. I'm here to wake you up. It could go to zero. Don't get upset at it. GM went to zero, okay? A whole bunch of big banks went to zero. A whole bunch of great companies that you don't remember or have heard of have gone to zero before. Successful companies have gone to zero. Sears, basically. Macy's almost went bankrupt. A whole bunch of companies. Airlines have gone bankrupt many times. So it can go to zero. So if you keep averaging down, you're going to end up with nothing. So I'm not calling it down there. I want it to succeed. I want to see those cool trucks on the road. By the way, my son tells me, he's 19, he builds trucks for a living. What do you call that? Trophy trucks, so off-road vehicles. And he saw a couple of electric semis from Penske. So I'm pretty sure they have a partner. How come that is not a spec? Maybe that's a new topic for you to discuss. Nick signing out.